Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is accounting errors. So, errors caused by a transaction being recorded incorrectly or not recorded at all. Previous year's financial statements are retrospectively restated, so we need to correct the previous financial statements as well. Prior period adjustment, in addition to or reduction in the beginning retained earnings balance in the statement of shareholders' equity. So just like accounting changes. We have here four steps. A journal entry is made to correct any account balance that are incorrect as a result of the error. Second, previous year's financial statements that were incorrect for as a result of the error are retrospectively restated to reflect the correction for all years. Step 3. If retained earnings is one of the accounts incorrect as a result of the error, the correction is reported as a prior period adjustment to the beginning balance in a statement of shareholders' equity. Step 4. A disclosure note. And here, guys, we have to think about what kind of error. If, for instance, is an inventory error, we are in 2021 and this inventory error happens in 2019. Probably there is no error anymore because they will be corrected naturally on 2020. So nothing needs to be done. However, if this inventory was last year and we are facing this error until now, we need to do it. Or if it is a long-term error, just like this one in our Excel file. And guys, remember, our Excel files, they are free and the link to download it is in our video description. Okay? So, let's consider here, in 2021, internal auditors discovered that Scarpin Corporation had debit and expense account for the $14 million cost of the sorting equipment purchased at the beginning of 2019. The equipment's useful life was expected to be 5 years and no residual value, only to make it easier here. And Scarpin uses straight line depreciation. So, okay, what happened in 2019? The company recorded an expense $14 million and then cash $14 million. This was the incorrect approach. What should have been reported? So that is not what we are going to do. That is what it should have been done. Debit instead of expense, debit equipment, credit cash. And 2 years of depreciation expense because it was purchased at the beginning of 2019. So 2019 and 2020. Remembering, we are in 2021. Depreciation expense, 14 million, no residual value, 5 years straight line method divided by 5. Then, this is what should have been done. So, okay, what should we do now? Step 1, to correct incorrect accounts. So, what do? We need to debit equipment. We need to add it in our accounting. We need to credit accumulated depreciation. How much? Accumulated depreciation 2019, accumulated depreciation 2020. And to balance retained earnings. So retained earnings to balance this journal entry. And it will increase retained earnings. Why? We are reducing our expenses. So we are increasing our retained earnings in 14 million and reducing the retained earnings by two new depreciations on $5.6 million. Step 2, previous year's financial statement. So that is step 2. Step 3, retained earnings. What happened with our retained earnings? On 2019, beginning retained earnings balance, no adjustment because all of our math was done in 2019. So beginning retained earnings, nothing. 2020, how do we find it? What is the change on beginning balance? It is 4 million we are adding on this expense, less depreciation expense on 2019. So we're adding in $11.2 million. What about 2021? Beginning balance 2020 less depreciation expense on 2020. $8.4 million. And it must match with the credit on retained earnings here. And then step four, a very good disclosure note. Okay, guys, so that's how we deal with accounting errors. Not so easy, not so hard. If it is too fast, just go back, watch this video how many times you want. And by the way, guys, subscribe to our channel. It's very important to us. And like our Facebook page, Accounting Hub by Dr. Scarpin. Thank you so much for watching these videos. Questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.